everyone. Thanks for making time for this month's update on our livestock markets. I'm Coulter Brown from the Northern Ag Network. At the start of May, it looked like a spring high may have been set in these live and feeder cattle futures, but actually May turned out to be an even more positive month as we saw just about every cattle market move higher, and with the optimism from more rain and these higher prices, looks like we could be in for a good year. Now that all the calves are on the ground, we're really focused on marketing this calf crop. So today we're going to try our best to say where this calf market is headed this year. That's a pretty big question right now. We'll look at the futures and fed cattle, of course, wrap up the spring female trade, give the weigh-ups a look, and glance at where the sheep market sits as well. First, of course, I want to thank the sponsor of our report, Ag Risk Advisors. We appreciate their continued support. Check out their podcast, At the Table with Ag Risk Advisors, to hear their latest episode on 2024 annual forage updates. So like I mentioned, at the start of May, it looked like the highs were in, the cattle futures were starting to drift lower. Not a big surprise. That's a pretty typical seasonal move, and we were expecting it, but didn't take too long before the market really recognized how tight these cattle supplies are going to get. Seemed like there may have been the realization that drought is hanging on in a wide swath of country, particularly in the southern plains, Nebraska, Kansas, Oklahoma, and the Texas Panhandle. Still seeing drought, and that of course is leading to more liquidation, but a lot of the northern plains looking quite a bit better. The futures also saw some help, particularly the feeders from lower corn prices that are down primarily on the expectation for increased yield and higher acreage. We actually saw new crop December corn move below $5 for the first time since late 2021, so that did help the feeder price out. And really coming back from the Memorial Day holiday, we saw the grain prices down and the feeders and live cattle just shot higher, new contract highs. There has been some concern about beef demand, but really the choice box beef cutout seems to be hovering around that $3 mark. So here in the heat of grilling season, at least for now, it seems like beef demand is going to hang in there, getting some help from pork prices that are comparatively higher. Back to the cattle futures though, the live cattle really set new contract highs more often than not, it seemed like, towards the end of May there. You can see the gains that we've seen across these live cattle, getting some support from the cash-fed cattle market. That's been a key driver. Actually, the cash was down for 4 consecutive weeks, but then regained much of what was lost in early May. We finished steady to $1 lower than where we were the month prior, mostly 172 to 178 on the live sales. A high though at 185. Dress trade down 3 to 4 from the April highs, mostly 282 to 286, the high water mark at 289. Actually, it's a situation that has some analysts scratching their heads as to what's going on with this market because, like I mentioned, we expect things to drift lower at this time of year as we move into the summer, and fed cattle supplies, the harvest-ready fed cattle at least, were considered ample. But feed yards were much more willing sellers as we've got a very strong basis in this market right now. So that's really helping to push those cattle through, pulling them forward, keeping the harvest-ready supply more current and prevent the carcass weights from increasing. Now, the cattle on feed report didn't really surprise anyone this month. We saw the inventory down 3%, placements down 4%. May have been down more though, but we're seeing the increased liquidation and feeders being pushed into feed yards faster because of the drought that's persisting in the southern plains. Now, packers are expected to pick up more leverage as we move through the summer, but they're also noticeably shortening the kill here to make up for dwindling margins, so we'll have to see how it shakes out. Right now, though, things look pretty positive. As we move over to the feeder futures, it's very similar to the live cattle. Just a meteoric rise, it seems like, this year. From the start of the calendar year, August feeders up nearly $40, so a lot of optimism there. And the feeder cattle market, of course, usually locks in its highs in the spring, so good to see it maintaining some strength, and really it's just a mirror image of what we've seen that corn contract do. And you know, the moisture we've seen come to the region has really made a big difference. Pasture conditions improving, and you can see just how much those feeder prices have increased in the last month. If you go back a month prior, we're talking a $16 to $20 increase, and most of the feeder contracts now above $240. All that together just leaves us wondering how high this thing can get here over the next couple of years. We'll shift from the feeder futures to the cash feeder market, look at some of our regional auction barns where, of course, this is a quiet time of year where there just aren't a lot of feeders to market, but boy, the prices haven't backed off at all, especially if there's load lots of cattle ready to go to grass performing very well. You can see a couple of those recent auctions on the screen, and no, that's not a typo. At the Billings Livestock Commission, we saw 5 weight steers top out at $3 a pound. 580 pounders to be exact there. Really strong prices. We've got 6-weight steers selling well north of $250 now, 7 weights largely in the $230s, and 8-weight steers above $2, and even the heifers seeing very strong demand. 6-weight heifers $235 to $250 at Billings Live. So extremely strong prices, which we're glad to see since the video sale season right around the corner. Of course, going to kick things off with Superior Livestock's Corn Belt Classic. Northern Livestock Video has their early summer preview later in June. Of course, depending on when you're watching this, that consignment deadline may just be coming up. And then as we move into July, there's just more video sales and some of the real big ones. So we're very optimistic on what these prices will do. Of course, the initial video sales, it's always a bit uncertain as to what that market's going to do, but a lot of optimism. We've also heard a few contracts for spring-born calves to deliver in the fall, and again, very strong. 5.5 weight steers at $271, 650 pounders at $261. I think there could be more upside to this market, but like we say, there's just uncertainty right now. If you're interested, livestock risk protection can be a tool to mitigate some of that uncertainty. As of this recording, a guy could have hedged calves under 600 pounds for October delivery at $266.19 for a premium cost of $640 a hundredweight. So there's definitely some cost to do it, but that leaves the top side open if the market moves higher still. If you have any questions on LRP, contact Ag Risk Advisors. Of course, the spring female trade is all wrapped up now. A lot of demand for replacement females. The replacement heifer buyers seem to have to compete with the feeder buyers this spring, but overall the average seemed about $200 per head higher, largely in the $1,400 to $1,600 a head range. CattleFax says they could have easily traded $500 a head higher if feed and pasture conditions were in better shape. The cow-calf pair market maintained its strength, a high of $3,800 on first calf heifer pairs at Faith Livestock. A lot of those young pairs in the $2,300 to $2,900 money, some still up over $3,000, and older pairs from $1,700 to $2,200, just depending on the quality. Well, the prices on the pairs definitely well above anything we've seen in recent memory. Of course, we're pretty much done with the cow-calf pair marketing time frame, but we don't expect these replacement females to weaken in the demand. Seems like it can only go higher over the next couple of years. Beef cow slaughter has slowed down from last year's extremely high levels. Of course, that may just be a function of we culled so many cows over last year, there just aren't that many more to sell. But at any rate, it has helped the price of slaughter cows to see that decreased supply. In April, the U.S. average slaughter cow price was $98. That compares to about $82 the year prior. That seemed like it was starting to weaken in early May, but some moisture getting to the southern plains seemed to reduce cow culling there, and really across our region in May, we saw most of those cows selling 95 to 105 with highs north of 110. A lot of demand for the young open cows as well that could go to feed or be turned out. Some of those 2-year-old heiferettes selling from 150 up to 180. And that takes us to the sheep market that has seen some struggles over the last couple of years, but a more current feed supply should help prices to push higher here as we get through the rest of 2023. The May on-feed inventory, the lowest it's been since 2010, and the lowest total lamb on-feed supply since August. A lot of the 60 to 90 pound feeder lambs across the region selling from 175 to 210, finished lambs 145 to 150, and slaughter ewes from 40 to 65. Well, that's going to do it for this month's report. Look forward to catching back up with you in June to report on some of these video sales. If you don't want to wait that long, though, you can always catch the current market information on our website at northernag.net, or follow along with us on your local radio station, or even check out our podcast at Northern Ag On Demand. Thanks so much for joining us, and have a good one.